important he's offering it to you, the cost of shipping. He's not an advertiser. I'm just telling you, for $4.95, that doesn't even pay for what the book cost him, so that he can warn you of what's happening. And he's predicted pretty much with total precision exactly what would happen the last year. And this went back several years, but he comes on every few weeks and just tells us the next shoe to drop. So there's no need to even have him on for an hour. Just have him on for like 12 minutes because he's a busy guy as well. He can just tell us what he thinks is coming next. HarryDent.com, founder of Dent Research, economic forecasting firm, MBA from Harvard, and I'm not going to go through the rest of his CEO jobs and things. But Mr. Dent, obviously you were on 2 weeks ago. Since then, it's what you said is happening. You said, stock market going down the next week, continuing. It might pop back up again, but then back down after that. You talked about all the technicals. So update us on what you predicted, what's now happened, and what you say is coming next.
Well, I tell you, just to run through a few quick slides, because it's important. In the short term, you have to get a little technical. Long term is very simple. Baby boom spends and then doesn't spend. Internet moves mainstream, then it peaks out as it has. So we've seen the best trends behind us, which we predicted 20 years ago, not just recently. But in the near term, I am seeing signs. Number one, our first chart shows that every bubble we've had since the late 90s has gone higher, and every crash has gone lower. And the big difference is that the last crash into early 2009, this final bubble was totally generated by printing money, just free money, companies buying back their stocks, engineering their earnings, everything's fake. And so this bubble is the most dangerous to me. It's almost...
Well, you've been saying that for years. You're right. And you said Microsoft, you said Apple would peak in the next few years. Apple now admits they've peaked, that now they're talking about demographics. Suddenly, a lot of folks are sounding like you, but because they were able to artificially keep it going a few years longer than they should have, and now at Davos they admit they're, quote, out of bullets, what does that signify?
Well, they are. And again, the biggest thing I get, Alex, every media show I get on, somebody comes in against me and says, oh, Harry, this is not a bubble because of this. I'm like, no, I lay over this bubble chart with every other bubble chart in history, including the late 94 to early 2000 bubble, which anybody would agree was a bubble. And it lays over almost perfectly, except this bubble's gone an extra year because of the stimulus, which makes it more dangerous. So, this first chart shows that after each bubble's gone higher, the next crash, which is likely to happen in the next year and a half or so, is likely to take us down 70% from the top in last May to like 5,500 to 6,000 in the Dow. Now, but there's a series of how this happens, and this is where it gets more short term. The next chart shows how we had this bubble channel. I mean, stocks just went straight up from late 2011 into 2015 in a narrow channel with almost no substantial corrections, and that's terribly dangerous when that happens. And finally, in August of last year, we broke down below that. I was warning our newsletter subscribers, man, if we break below this channel, then you got to start thinking this thing is over. The next chart, very simple again, shows for the first time compared to most bubbles, because this has been artificial and stretched so long, we're having a rounded top here. It's not like it just gets crazier and crazier and then finally blows like China just did, or we did in 1929 or in...
And you said on the show 3 years ago you thought it would start with China blowing. You predicted it exactly.
Yes, I mean, and that's...
You said out of all of the triggers, China was the most likely.
China and oil, which has also been another big trigger. And I tell you, next going to be Germany and Europe, because Germany's got the worst demographics of any country we've seen since Japan in the early 90s, and we were the only people that predicted Japan would go down. So, but we're having this rounded top because, there's all this stimulus, but the fundamentals keep getting worse. So it just keeps bending over, and we broke another key level recently at 1880 on the S&P 500. And then the final chart just shows, here's the most important thing to me, the classic sign of tops, like back in 2000 and 2007, because bubbles just keep going and they're irrational. And is it when the smaller companies start underperforming the large companies significantly? And this last chart shows that not only are the small cap stocks, down twice as much as the large cap stocks recently, but they've broken some very key levels. And so sometime in the next couple months, we're going to break down more substantially. But remember the first chart. The first chart says this will just be the beginning of another 2008-like crash, which is going to go deeper and be steeper on the downside, just like it was steeper on the upside. So I don't know exactly when this is going to happen. Nobody does. The short term, very hard to predict. I'm having a big meeting with my company right after this call with our shorter term analysts and our longer term to consider where we're at, because we're at a critical point. But I'm telling you, in the next year, if you're ever going to protect your wealth and protect your assets, this is the time to do it, because I think, and I've been predicting that 2016 will likely, beginning to end, be the worst year for stocks since 1931.
And you said that months and months ago here. Then we heard almost the exact same headlines plagiarized by Soros, by the Wall Street Journal, by the Financial Times, and the Royal Bank of Scotland came out and said, sell everything. I mean, this is really scary. I mean, you've been probably the most accurate person out there, I've got to say. How bad do you think it's really going to get?
Well, again, I mean, after they have extended a bubble that was already extreme, more extreme than the 1920s bubble, and of course that led to the Great Depression. What people don't understand is when you stretch an economy so far with excessive debt, and the longer an economy does well, the more everybody speculates and borrows and feels okay. When you do that, you're going to have a bigger downturn. So this is going to be something like the 1930s when it finally cracks. And the only reason it hasn't cracked thus far is $9 trillion, and some people estimate much more, but I'm conservative, $9 trillion in printed money, not counting all the
And now you've got the giant populations unraveling worse than then. You've got this socialist idea, more entrenched than it probably was in the 30s. This is going to be a move to bring in socialism and wealth redistribution that'll only stall things even worse. I've got to say, I agree with you. You've been proven right, and I think it's going to be far worse because people were more self-sufficient in the 30s. Most of them knew how to grow a garden. I mean, I'm not trying to be mean, but we got a bunch of immoral, spoiled brats in this country, and oh, my God, I'm scared, actually.
Well, and I tell you, it's worse in China because they've overbuilt. They're the big bubble. We were the biggest bubble in the roaring 20s. In the world, even though the whole world had a bubble. China is the biggest bubble today, and they've moved 500 million people, twice the population, from farms where they were self-sufficient into cities where they have no skills and only dependent something for nothing.
So it's a time bomb, and the fuse is getting short. So let me ask you this. Time frame, is 2016 worse or 2017? I mean, when do you think it really becomes evident that we're screwed and then confidence falls out at the bottom? They'll have some new banker bailout plan, some new bubble, but they're saying they're out of bullets. Do they just admit there's nothing and then let it all stagnate? I mean, whoa.
Well, first, yes, I think we're getting signs from everything I said earlier that this bubble's finally blowing. It is really hard to predict. Ask me, because I've had to do it in the past, when a bubble's going to blow, but we're finally getting the signs. When it does, it's going to be dramatic, just like we just saw China down 45% its stock market in 2.5 months. It'll eventually be down 90%, but half the damage of a multi-year downturn was done in 2.5 months. So I always tell people it's better to get out of a bubble a little bit early, because when it finally does hit reality for everybody in La La Land, then it happens very rapidly.
So Royal Bank of Scotland is absolutely right when they say sell everything.
Yeah, I mean, normally I'd say, hey, get a little more this or that. No, this is a time, I'd say, for the next year, even though it may not start to bottom until early to mid 2017 and may not ultimately bottom for 2020 to 22 in our longer term forecast, I think most of the damage is going to be done in the next year.
So you say depressionary in many areas of the world, as bad or worse. Will it be unevenly distributed like the last one? You say we're not as bad as others. Will it be a depression here?
Yeah, well, I think, Alex, the most important thing is we triggered the last Great Recession, they call it. It was starting to be a depression.
2008.
Subprime crisis, but it only triggered a debt crisis that already existed around the world. This time, after all this stimulus, 6 years of endless stimulus, if this fails, people are going to lose greater confidence. And this is going to happen around the world. And the Chinese are the leading buyers of real estate in the leading cities around the world, especially English speaking. When they stop buying, and they already are, oh, the whole
Harry Dent, I'm going to keep you at the bottom of the hour so we can come back with one more short segment and talk about how we protect ourselves and other technicals you can give folks. HarryDent.com, and we're also you can get his book for free, basically, folks. You should. It's a great deal. I know what publishers cost. It costs him about $6 a book, his own book, and then he says I'm correct, about $6 for a nice book like that, and then he gives you shipping $4.50. He's losing like $2-3 on it, and it's a great book. You really need it. Roger Stone, the shadow campaign head for Trump, is going to be on Megyn Kelly tonight, but he's going to be with us at 2:30 Central today. Just got the text. And he's gotten us in with the feed at the Trump event. We're going to have the feed of that. CNN's also running into the trough. I expect to have them. They're trying to shove us out. That's just what the mainstream media does. They think they own and run everything. They're a joke. And Trump is really killing that. I want to just spend a minute or so on what people should do, also on what our guest thinks of what's happening in the economy, Mr. Dent of dentresearch.com. But before we do that, Max Kaiser, another smart guy, made a lot of accurate predictions, predicted the crash that was coming, some other things, made a few mistakes as well, but a smart guy, outside the box, international TV host, former stockbroker. I brought up Dent to him and said, look, Dent's been a little more accurate than you in some ways. What do you say to him when you think gold's going to come back up? Here's that clip for Mr. Dent.
Look, Harry Dent has been really good in terms of the last 5 years. If you, with all the people that you just mentioned, he's probably got the hottest hand in terms of calling deflation, where everyone else has really been saying inflation. He was very good to say deflation. All commodities have been deflating. Oil's deflating, and he includes gold in that basket. But my response would be, look at gold outside of just the U.S. dollar, because if you look at it through other currencies, it's reacting very, very well. It's hitting new all-time highs, number one.
Sure, so outside of the rigged economy, it's doing well.
Well, on a global basis, it's responding well. And the second point I would make is that one aspect that Mr. Dent does not get into that I think is worthy of consideration that would change the dynamic pretty dramatically is if a country like Russia or China decides to partially back their currency with gold. So gold is once again monetized. Then it's really a different paradigm at that point.
That's Max Kaiser from Russia. They're in Red Square Tuesday joining us. Mr. Dent, your response to what he said.
Yeah, I mean, first of all, Max, I've been wrong at times, too. Anybody that makes strong forecasts is going to be wrong. And we did see this deflationary thing. That's been our big theme, is the baby boomers slowing down, the largest generation in history, and a deflation from the bubbles of the past, and especially from the overexpansion of China. So I agree with you. I mean, that's what's been most hitting gold, is that China is one of the biggest buyers of gold in the world, not just industrial consumers.
But he's saying if their stocks go down and their currencies devalue, that they'll run to gold, whether you think it's a commodity or real or not.
Well, I think they're learning the same thing, that gold was a bubble. I mean, I was debating, many gold bugs, and they always say, oh, well, gold's not a bubble. I'm like, it went up 670% in 10 years. That's a bubble in any stock, any real estate, any commodity. So I think gold is just coming back down to reality. I think long-term gold is going to do well because we're going to have an emerging country-led boom.
Oh, yeah, I think you answered that fairly. I think you're both very smart. People can make their own decisions, but obviously time will tell. In the 3 minutes we've got left, other key points to look at, other info you want to impart to folks, and any other predictions?
Well, real quickly, for people in gold, we've been saying it's due for a bounce, 1150 to 1300. We're almost 1150. I would say around April, reevaluate gold. If it's up then, I would say sell. I would also say get into the safest high-quality bonds, short-term and long-term, but short-term at first, because that's the only thing that did well in the Great Depression. Stocks, commodities, and real estate all went down and were slow to come back. And you've got to get out of stocks on any rallies here. We've already violated some major areas, and I'm saying every time the stock market bounces, and my short-term people are telling me we're due for a bounce here. Well, if we bounce in the next couple of weeks or so, or month or whatever, sell, get out. If you're wrong, you may miss 5%, 10% at best. If I'm right, you could avoid 50 to 70% decline.
Are we going to see, when this finally goes belly up completely, people jumping out of buildings again en masse?
Well, that happened. Suicides peaked in the middle of 1932 at the bottom of the stock market, and homicides, murders peaked in the middle of 1933 at the bottom of the economy. Yes, these things are impacting.
Yeah, so folks need to get ready to weather the storm. Again, the website, where's the best place for folks to go on your website to find the free book deal where folks just pay the $5 for shipping?
Yeah, just go to harrydent.com, free book, $4.95 shipping. And in the upper right-hand corner, we have a free daily newsletter, Economy and Markets, that you can also just put in your email and you get a free newsletter. And we just want you to listen to us until you fall in love with us. That's all. Or hate it.
Well, I think we've definitely fallen in love with your information. We like to be on top of things, Mr. Dent, and I follow your newsletter as well. Thank you so much. Look forward to talking to you again.
Thank you, Alex.
All right. Look, we're not fearmongers. We just want to be ready for what's coming. That's called being, you know, in charge, ready, and being competent and taking care of your family. And, you know, we hope for the best, prepare for the worst, but this is serious. Stay with us. We're going to go to Oregon in the standoff. Alex Jones here to tell you about how you can help spread liberty worldwide while also enjoying what I have found to be the best tasting 100% organic coffee on the planet. For more than a decade, my favorite coffee has come from the high mountains of southern Mexico, where the Chiapas farmers grow their unique shade-grown Arabica beans. We have now managed to secure these sought-after beans in a highly customized blend. Discover and try a bag of the Patriot Blend 100% organic coffee at InfoWarsLife.com. This coffee gives you a long, smooth pick-me-up for hours without the headaches and heartburn that so many other coffees give me personally. Hands down, this is my favorite coffee, and it's taken us years to secure connections directly to the Chiapas Mexican farmers. Drop by the site today, order a bag or two, and I don't think you're going to be disappointed. Available in original or with our Immune Support Infusion Blend. You will be supporting a free press, all the while enjoying a truly great-tasting cup of my favorite coffee. Available at InfoWarsLife.com.
People are going to lose greater confidence, and this is going to happen around the world. And the Chinese are the leading buyers of real estate in the leading cities around the world, especially English-speaking. When they stop buying, and they already are, the whole
Harry Dent, I'm going to keep you at the bottom of the hour so we can come back with one more short segment and talk about how we protect ourselves and other technicals you can give folks. harrydent.com, and we're also going to, you can get his book for free, basically, folks. You should. It's a great deal. I know what publishers cost him about $6 a book, his own book. And then he says I'm correct, about $6 for a nice book like that. And then he gives you shipping $4.50. He's losing like $2-3 on it. And it's a great book. You really need it. Roger Stone, the shadow campaign head for Trump, is going to be on Megyn Kelly tonight, but he's going to be with us at 2:30 Central today. Just got the text. And he's gotten us in with the feed at the Trump event. We're going to have the feed of that. CNN's also running into the trough. I expect to have them there trying to shove us out. That's just what the mainstream media does. They think they own and run everything. They're a joke. And Trump is really killing that. I want to just...
mainstream, then it peaks out as it has. So we've seen the best trends behind us, which we predicted 20 years ago, not just recently. But in the near term, I am seeing signs. Number one, our first chart shows that every bubble we've had since the late 90s has gone higher, and every crash has gone lower. And the big difference is that the last crash into early 2009, this final bubble was totally generated by printing money, just free money, companies buying back their stocks, engineering their earnings, everything's fake. And so this bubble is the most dangerous to me. It's almost...
Well, you've been saying that for years. You're right. And you said Microsoft... you said Apple would peak in the next few years. Apple now admits they've peaked, that now they're talking about demographics. Suddenly, a lot of folks are sounding like you, but because they were able to artificially keep it going a few years longer than they should have,